Welcome to The Explainer. Today, we're diving into what could be one of the biggest shifts in modern investing. Seriously, we're talking about bringing real-world assets onto the blockchain. So let me ask you this. Have you ever wanted to invest like a billionaire? For decades, the absolute best, highest-performing assets have been locked away behind closed doors. But there's a new technology that's about to hand you the key.
So first, let's just lay out the problem, because it's a big one. For generations, there's basically been a two-tiered investment world, a kind of walled garden for the ultra-wealthy.
And this chart, wow, it just says it all, doesn't it? This shows you the 20-year returns across different kinds of assets. Look over at private equity, 13.7%. Venture capital, a whopping 15.8%. Now compare that to the S&P 500, the main stock market index, at 9.1%. For 2 whole decades, the best returns, the real wealth creation, was happening in these private markets that were pretty much completely off limits to the rest of us.
So why? Why the big difference? It all comes down to access. Public markets, stocks and bonds, they're open to everyone. You can start with a few bucks and you can buy or sell whenever you want. But private markets, totally different story. It's been an exclusive club. We're talking massive minimum investments, 100 grand easy, and then you have to lock up your money for like 7 to 10 years. That's just not realistic for the average person. Okay, so how do we get inside that walled garden? Well, the answer is this incredible technology that's finally starting to break down those barriers. It's called tokenization. In the simplest terms, tokenization is all about creating a secure digital twin of a real-life asset. You take the ownership rights of something tangible, a building, a business loan, even a government bond, and you represent it as a digital token that lives on a blockchain. And how it works is actually pretty straightforward. First, you take a real asset, you legally secure it, and you verify what it's worth. Then, you digitally slice up the ownership into thousands, maybe millions, of little pieces called tokens. And finally, investors like you and me can just buy and sell these tokens on a marketplace. Suddenly, you want a piece of that asset. You don't need $100,000 anymore. You could get started with 100. All right, so this isn't some sci-fi, futuristic idea. It's really happening right now. So let's get practical and look at what you, as a U.S. investor, can actually access today. And this is where the story gets really, really exciting. Check out this chart. This shows the market for tokenized U.S. treasuries, basically digital versions of government bonds. It has absolutely exploded. We're talking from under $100 million to over $700 million in a single year. This isn't hype. This is real adoption, and it's starting with one of the safest assets on the entire planet. For investors here in the U.S., this is without a doubt the most established and easiest way to get started. And why is that? Well, because U.S. Treasuries are familiar, they're low risk, and they provide a nice steady yield. It makes them the perfect on-ramp into this new world of tokenized real-world assets, or RWAs, as they're often called. And get this, it's not just small crypto startups leading the charge here. We are seeing massive financial players jump into the game. I mean, Franklin Templeton, one of the biggest asset managers in the world, has its own tokenized treasury fund. And then you have these leading crypto-native platforms like Ondo Finance and Matrix Stock building slick, easy-to-use products. The bridges are being built as we speak. But look, government bonds are really just the beginning. The truly game-changing part of all this is when we start tokenizing those private market assets we talked about earlier, things like private business loans and real estate deals. That's where you find those potentially higher yields. So who's actually building these new marketplaces? Well, you've got platforms like Centrifuge, where you can invest in pools of tokenized small business invoices and mortgages. You've got Mantra, a whole blockchain dedicated to tokenizing real estate. And even the big DeFi pioneers like MakerDAO are now using these real-world assets, things like trade finance products, to back their stablecoin. I mean, think about it. These are asset classes that were completely off limits to regular investors until, right now. Okay, but with any massive opportunity like this, there are going to be risks. This is a brand new frontier, and it comes with some unique challenges that you absolutely need to understand before you jump in.
This quote, this one really makes you think. It kind of flips the whole script. Everyone assumes the big selling point of tokenization is making illiquid stuff easy to trade. But the big money, the institutional investors, a lot of them invested in private equity because it was illiquid. Those long lockup periods prevent people from panic selling and allow for real long-term strategies. So the promise of 24/7 trading, it's not actually the main attraction for everyone.
And that brings us to probably the biggest technical hurdle of them all, the Oracle problem. See, a blockchain is like a sealed digital vault. It can't see what's happening in the real world on its own. An oracle is the bridge that feeds it that outside information. But here's the challenge. How does a digital token that represents an office building know that the rent got paid on time? How does it know the building's value just went up? Making sure that connection is accurate, secure, and can't be tampered with, well, that's absolutely critical.
So, beyond that Oracle problem, there are a few other big hurdles to keep on your radar. First, regulatory uncertainty is huge. The rulebook is still being written for all this stuff. Then there are technical risks. These public blockchains weren't really built for the kind of strict compliance that finance demands. And finally, market risks. Valuing some of these unique assets can be tricky, and hey, just because something is a token doesn't automatically mean there's going to be someone ready to buy it from you 24/7. So, keeping all that in mind, the huge opportunity and the real risks, how can you actually get started? How do you navigate this new world safely and smartly?
Well, I like to break it down into a simple 3-step toolkit. Step 1, learn more. Do your homework. Step 2, monitor the key projects that are building the infrastructure. And Step 3, research the specific platforms that offer the kinds of assets you're actually interested in.
For Step 1, a fantastic place to start is an analytics platform called RWA.xyz. It's what the pros in the industry use to track the growth of the entire market in real time. You can see which assets are blowing up, what technology they're using, and you can discover new projects as they emerge.
Now for steps 2 and 3, it helps to think in 2 layers. First, watch the infrastructure projects. I call these the picks and shovels of this new gold rush. Chainlink is the big one here. It's the leading Oracle network that's working to solve that huge data problem. Then, you can follow the platforms themselves. So if you're interested in private credit for small businesses, you'd keep an eye on a platform like Centrifuge. If you want to start with something safer like government bonds, then you'd follow a company like Ondo Finance.
So why does all this matter? Why should you pay attention? Because the potential scale of this whole shift is just mind-boggling. We're talking about analysts and major firms projecting this market could be worth $16 trillion by 2030.
And that brings us to the final multi-trillion-dollar question. Is the tokenization of everything going to be the single biggest shift in investing for our entire generation? The foundation is being laid, the assets are coming online, and now you've got the toolkit to start finding your own answer.